welcome to this week's MFB News. I hope everybody is well and that you had a really, really lovely Easter break. We were hiking in the Peak District. It was actually really good. I have to be honest, I wasn't overly looking forward to it. I'm not a natural hiker, I don't like heights. And secondly, the weather was forecast to be pretty rubbish. We got there and actually it didn't rain too much. And yeah, the hiking was still really tough. I've realised how unfit I am. Actually, 2 days of climbing up and down hills and I've given myself shin splints. So there you go. Time to get back to the gym for me. Now, in terms of what we're going to have for you this week, it's going to be quite a quick episode. There's only been 3 working days since we last caught up. So not huge amounts of news, but there's still always stuff to talk about. It's never dull in the world of buy-to-let. So we're going to have a quick look at what's been happening with interest rates and swap rates. A couple of really large pieces of lending criteria change. Or one piece of lending criteria change, one new lender to the limited company space. This is exciting. And then we're going to have a quick update on where we are with the Renters' Rights Bill and wrap it up for this week. So first up, let's have a look at what's been happening with swap rates and lender pricing. So the first thing that's kind of going on is that gilt rates have come down. And this is having a really positive impact on swap rates. So great news for those of you who are looking for fixed rate mortgages. The fixed swap rates have come down a bit, which means that there's more kind of pathway for lenders to drop their fixed rates down once again. Assuming it stays on this level, I would hasten to add if things suddenly jump back up, then obviously we're going to have a slightly different conversation there. So why are gilt rates coming down? So essentially the US is no longer seen as a really safe place for people to invest money. We've got a slightly unpredictable guy running the place at the moment, making some very unusual decisions. So actually people are saying, well, we don't really think the US is quite as safe as it used to be. Where else can we invest our money? And this is making the UK gilts or bonds in simple terms look more attractive to investors. So because we're having to work less hard to attract investors to us now because we're seeing as more safe than the US, that means we don't have to offer such a competitive interest rate. So our gilt rates have come down and that is driving down swap rates. And before we go on to swap rates, just one more thing in terms of base rate predictions. So we have the MPC meeting coming up imminently. Still people are expecting that base rate will be coming down by 0.25% at that point and possibly 2 more times this year. I'm not so sure myself and I'll explain why in a second. I think it's more likely to be 1, but 2%, 2 more cuts this year is really where the markets are calling things. So for those of you who are hanging on and waiting for a fixed rate but thinking you're going to wait and see what happens in May with base rate, just know the markets have already priced in a 0.25% reduction in May. If base rate were to come down by 0.5%, that would materially change swap rates because things had behaved differently to what the market were predicting. But assuming that base rate comes down by 0.25% in May, that's already been priced in to swap rates. So there's going to see no big change in fixed rates in May if that's what happens. That's just really important to note. So the reason I mentioned that I wasn't so sure about 2 further base rate predictions this year is largely due to inflation. So while the tariffs are doing great things for gilt rates, on one hand we kind of win, and there is a kind of expectation that some of the tariffs will be deflationary. Actually, the OBR have said that in the round the tariffs are going to be inflationary and could actually push up inflation by 0.7% higher than was predicted this year. So the MPC have got this kind of very fine balance that they're trying to kind of constantly have, and they're trying to kind of get the markets going. They want to kind of get people spending money. We want to generate growth in the UK, but on the other hand, they've still got high wage inflation. Unemployment is doing relatively well. Less companies are actually listing jobs available, so new vacancies aren't coming on. But at the moment, we're not seeing large amounts of job losses in reaction to the tariffs and the taxation from the NI and all the rest of the stuff that's going on. So actually, jobs are kind of doing not bad at the moment. Fingers crossed that continues. So wage inflation, job security, but we also know that things like the cost of our heating and stuff at home is increasing, and also we know that tariffs are going to be inflationary. So actually inflation will not be as under control as people had thought. So very, very difficult for these guys. So where are we with swap rates? That was a very long way of getting there, wasn't it? So 2-year swap rates as of last night were at 3.7%. 1 month ago just over 4, and 1 year ago they were at 4.5. So both month on month, on year and year, we're doing really well. And for 5-year swap rates, as of last night, 3.69. So they're about 3.83, I think, this time last week. So they've come down again. 1 month ago they were at 4%, and 1 year ago just over 4%. So again, things have really tracked downwards. What does this mean for you guys? It means that actually the lender's cost of funds has reduced. So even compared to last week when we saw a whole wave of rate reductions, things have come down by circa 0.15%. So this really does mean that actually lenders have the opportunity to drop their pricing down a little bit further should they so wish. Okay, now we have a new lender into the limited company space. This time it's the Coventry. So what we are starting to see is more and more of the high street lenders come into the limited company arena. I remember when Section 24 was announced and limited companies became a real thing, most of them saying it will never take off. Now they've been scrabbling around trying to get their IT systems to be able to accommodate for it, and here they all are. So fantastic news. Welcome to the limited company space, the Coventry. Okay, so what does it look like? It's very, very kind of similar in many ways to the offerings from people like the Leeds and the Mortgage Works. So it's quite a kind of vanilla staid offering, not particularly niche, but actually that's okay because that actually accommodates for loads and loads of company setups with clients that we see at least, and I'm sure is representative of the whole of the UK. So what do you need to know? So first of all, up to 75% loan to value. They're offering 2 and 5 year fixes. They can deal with purchases and remortgages. The minimum loan size is 25,000, maximum loan size is £1 million, and minimum property value is £75,000. Now, in terms of eligibility requirements, I think the kind of key things here are, so first of all, you can have no more than 7 properties mortgaged with the Coventry up to a total debt position of 2.5 million. And 15 buy-to-let or rental properties in total, and that's either in your own name or through a limited company. Now that's an interesting one, because what the Coventry used to do is when they're lending personally, they would say you can have up to 10 buy-to-lets in your own name. We don't care about limited companies, we're ignoring those because it's a separate legal entity. They were really unique in that way. But it looks like now what they're doing is saying actually it's 15 properties, personally or limited companies. So they've kind of changed their position on that a little bit. So some you win and some you lose, right? Up to 4 directors and or shareholders is accepted on the application, and they must own at least 80% of shares and voting rights. Now this is very similar to the policy of Paragon. So essentially what they're saying is, so the people who are directors and shareholders must own at least 80% of the shares. So what you can't have is the directors owning say 4 directors owning 5% of the shares each, and then the rest of the shareholders not being directors. So not a straightforward requirement, but essentially what they're trying to make sure is that the ultimate beneficial owners of the company are the people who are controlling the company, i.e. the people with the voting rights. So they're the people that make the decisions. No minimum income required, so you don't have to earn any specific level of income to be eligible with these guys. The rental calculation, very standard in limited company space, 125% coverage. Limited company has to be an SPV, so your SIC code's very, very standard, 68100, 68209 and 68320. They will require independent legal advice, and this is one that catches people out often. Most lenders need this. So independent legal advice is once you've got the mortgage offer, all people who are providing a personal guarantee for the mortgage have to go and spend time with a solicitor who's going to run through the personal guarantee and what it actually means for you. Why do lenders ask for this? Because years ago, there were a husband and wife who had some buy-to-let properties through a limited company. Wife had signed a personal guarantee. It all went horribly wrong. They ended up in court with repossessions. Wife said, well, I just signed this personal guarantee. I had no idea what it actually meant, and it became unenforceable. And therefore the lender's position was totally compromised. So these days lenders say, look, we need to be absolutely clear that all people offering a personal guarantee understand what this is. Doesn't sound like a big deal, but lenders charge, solicitors rather charge quite a lot for ILA, and if there's 4 of you on the application, you're paying for it 4 times. So that can ramp up your costs a little bit. The other thing just to note is that they can accept first-time landlords. However, you must, the applicants, so the people giving the personal guarantees, director shareholders essentially, must be owner-occupiers, unless a close relative to an applicant is also an owner-occupier. So broadly speaking, you just need to be an owner-occupier. In terms of rates, and this is where it gets interesting, the rates are really good. This is why I was quite excited about the Coventry coming in. So they are one of the sort of more competitively priced lenders in the market. So these guys are now going to be competing with the Leeds, the Mortgage Works, those kinds of lenders. Pricing, to give you a flavour, 5-year fixed rates from 5.16% with a £4,000 fee, and they also offer free valuations. So really, really nice. Now, this only came out on the Newswires yesterday. I haven't had a chance to really dig into it with the commentary. So there could be some kind of peculiarities in the lending criteria. Just to say, they aren't doing layered companies, they're not doing things like incorporations, they won't be doing HMOs, they're not doing multi-units, so it is more of a kind of vanilla offering. But like I say, that scoops up loads of views, that's really positive. Now the other criteria change, and it is a criteria change this time, is that the Mortgage Works are now saying that they will accept applications where one applicant is only a shareholder who owns at least 20% of the shares in the company. So what they used to do is say, actually, we can only accept 2 applicants and both of you have to be the directors and shareholders. So there can only ever be 2 people who kind of formed the company in the 2 main roles of director and shareholder. Which actually, again, it works for loads of companies. It's not like a massive thing, but it did actually exclude quite a lot of people, particularly these days where more and more landlords are using limited company structures to really think about estate planning. So they're starting to give mainly, most of the time, quite small percentage of shares, but still giving away or allocating some small percentage of shareholding to their children. So in that situation, that would then have precluded you from applying to the Mortgage Works. However, what they're saying now is that actually not all applicants have to be directors and shareholders, but if they are a shareholder, they have to own at least 20% of the shares. So there you go, some good positive changes. I say there's really strong positive changes actually. We all know the limited company market continues to grow. As I've mentioned many times before, at least 80% of all purchase transactions that landlords make via us are through limited companies. So actually enhancements to the limited company criteria space are always really, really welcome. Okay, quickie on the Renters' Rights Bill. So yesterday, the committee stage of the Renters' Rights Bill commenced in the House of Lords. This stage involves detailed examination of the bill's provisions, with peers debating and proposing amendments to the bill. The debate is scheduled to continue on April the 24th and further dates into May as well. So here were the key subjects under discussion, and I think the reason that this is important to you guys is that these are some of the kind of key topics. So there may be some room for some improvements, or maybe even, and we might see some more negative changes, fingers crossed, we won't know. So the first thing they were discussing yesterday was the abolition of Section 21 no-fault evictions, ending rental bidding wars, limiting rent in advance, prohibiting discrimination, allowing pets in rental properties, and extending the decent home standard. Now, because the debate's only started yesterday, I haven't got any updates in terms of what came out of that conversation, but just know these are things that are now starting to be debated. It's probably worth you keeping an eye on that if the Renters' Rights Bill is something that you're very interested in, which is like basically every single landlord in the UK. But obviously, as soon as we have any updates on these discussions and amendments, we'll let you know exactly what they are. And there we go, a short and sweet update in terms of what's been going on in the last week. But I say week, it's only been 3 working days. It's amazing how much you can cram in this kind of space, isn't it? Thank you, as always, for joining us. And if you have any questions, we always love to hear from you. 0345 345 6788. No question is too small, and they are never stupid. We're always very happy to have a chat, so do get in touch. I shall look forward to seeing you again same time next week. Have a good one, and I'll catch you next time.